Got Ryan Rasmussen joining us, head of research at Bitwise. Ryan, good to have you back. Welcome. I want to begin with how ETHW, the Bitwise Ethereum ETF, is now trading on the NYSE. Congrats to you. And just over 6 months now after the launch of the Bitwise Bitcoin ETF, BITB, which became one of the fastest growing ETFs in history, on its way to $2.7 billion under management. Ryan, clearly some demand for these products for investors out there.
Yeah, Ben, it's really exciting what we've seen so far this year with the launch of the ETFs. I feel like I've lived a few years just in the past 6 months alone. We had the Bitcoin ETFs launch in January. Those were the most successful ETF launches of all time. We've seen a ton of demand across the board from financial advisors, from retail, from family offices, and other institutional investors. And that demand's really flowed right into the Ethereum ETFs, which launched last week. And again, we've seen historic launches with these Ethereum ETFs. They've generated over $1 billion of inflows into the new ETFs that launched this past week. So really, really exciting what we're seeing here. I think crypto's finally entering its mainstream era, and it's doing it in the US, but it's also doing it at a global level. And it's really, really exciting. The demand is certainly there.
Yeah, I think last time on I was talking about how on the date of the launch, one of the guys in the office, I remember kind of overhearing him say, yeah, I'll put some of this in my portfolio, right? Might as well. It's now available to me as an option. And I feel like if that's indicative of what we're seeing in terms of the broader base and financial community, this thing will continue to see further demand. Talk to me, do you expect to see demand for the Ether ETF to match that popularity, that strong showing that we saw?
Yeah, definitely. You have to remember that Ethereum is not as large of an asset as Bitcoin. It's about 20-30% of the size of Bitcoin. So from that perspective, I wouldn't expect to see demand as high as you've seen for the Bitcoin ETFs. But on a relative basis, I certainly think that investors will be just as excited about the ability to access Ethereum easily in their brokerage accounts, as you mentioned. And I think we'll see that continue to play out as platform approvals and due diligence processes are underway. And we start to see these RIA firms, financial advisory firms, these wirehouses start to approve their wealth planners in being able to invest in these assets. And so I think retail will drive some of the demand. I think institutional investors will drive some of the demand, but I certainly expect to see similar levels of demand on a relative basis to Ethereum as we saw with Bitcoin.
Ryan, talk to us a little bit about some of the volatility we saw yesterday, because we saw took note of the run-up into the open and then that strong sell-off that we saw off that 70,000, 71,000 level. For one, I think an example of how even with the ETFs, right, Bitcoin's still susceptible to some of that intraday volatility and big swings one way or the other. So kind of buyer beware in terms of that. If you're don't have the stomach for that kind of intraday movement, then definitely you want to, try and position yourself differently if you want exposure to this. But maybe ETFs being a better option there than the futures. But it seemed tied to some of the news that the U.S. government had moved some funds around, some Bitcoin around, some Bitcoin that had been seized ultimately. And then I guess the concern is that this is going to hit the market at some point and add to the supply component.
That's right, Ben. Certainly Bitcoin and Ethereum and crypto more broadly is no stranger to volatility. And so we have seen these kind of massive run-ups and some resets happen over the years, particularly since the ETFs launched back in January with the Bitcoin ETFs. We saw price range anywhere from 74K down into the $40,000 range. And so certainly it's a volatile asset. A lot of advisors, a lot of institutional investors love the volatility. It helps to add some diversification to their portfolio because it has lower correlations with other traditional assets. But the news elements that drive Bitcoin are very, very interesting. For example, we had Donald Trump, presidential candidate, speak at the largest Bitcoin conference in the world on Saturday and lay out a multi-point plan for a pro-crypto policy or pro-crypto campaign and platform. And then we have rumors of the other candidate, Kamala Harris, looking to reset how the current administration has approached crypto more broadly over the past few years. I think those news elements helped lead to this run-up in price that you mentioned. And then as you said, we saw a couple $1 billion worth of Bitcoin that the U.S. government had previously seized from law enforcement actions move between wallets or accounts on the blockchain. And I think it just goes to show that right now we're in this transformative moment where the administration and the powers that be are really starting to understand that voters will vote based on crypto in many circumstances. There's tens of millions of Americans that own crypto and they will vote based on that. The price is also near all-time highs. So does the government want to take advantage of that? Or do they want to hold on to Bitcoin? As Donald Trump said, if he took office, he would instruct the government not to sell any of that Bitcoin. So really what we're seeing here is we're kind of in this in-between period of the government not really knowing what to do, but understanding that's becoming a bigger issue with voters and on a more macro and global level. And so it's just really exciting to see. But certainly some of that fear of it being sold on the market would lead investors to maybe front run that selling. The great thing about these ETFs and the great thing about Bitcoin is that it's a global asset that trades tens of billions of dollars worth of volume a day. So it can handle a $2 billion sale over a course of many days relatively easily and relatively calmly.
Talk to me lastly about, I'm reading some comments in this recent newsletter. It looks like CIO, Bitwise CEO Matt Hougan talking about Bitcoin ETFs starting a new ball game for crypto. He basically said that it moves us to the second inning. He talks about how the launch of Spot ETFs moves us to the second inning again, making Bitcoin available in the exchange-traded form. Brought more than $17 billion in new investments into crypto in a matter of months, but he thinks this launch will extend the run with billions more and the ETH new all-time highs in 2024.
Yeah, I certainly agree with that. The level of demand that we've seen so far in just a few months for Bitcoin ETFs, in just a week for Ethereum ETFs, is indicative, in our opinion, that we're going to see sustained demand over the next 6, 12, 18 months and beyond. I had a really interesting meeting yesterday with a large national bank around what they were going to do with these crypto ETFs. And what we're finding is that these platform approvals, these approvals of these large banks are still many months away, if not 6, 12, 18 months away, because their processes for reviewing these assets and figuring out what to do with them and which ones to approve and then educating the wealth planners and then them educating their clients and finally making an allocation. It's just a really long process. So I think the demand we've seen so far is really just the tip of the iceberg. And I do believe that with more sustained demand into these ETFs, with this easy to access format, it's low cost, it's regulated, it's tax, it fits right into the tax framework and other framework that most investors are used to in their brokerage account. I think with all of those factors, with the ability to easily invest, we're going to see more demand for these ETFs once more and more investors are able to access them on these different platforms, once more wealth planners are able to allocate to them in model portfolios and on behalf of clients. And that's just going to continue to drive the price higher and higher.
Ryan, one more thing. I found this interesting. Can you talk to us a little bit about the two organizations that you're donating 10% of profits to these Ethereum open source developers?
Yeah, it's a great initiative. At Bitwise, we've been around since 2017. We're really aligned with the crypto community. It's all we do 24/7, 365. We're a crypto asset manager only, and that's it. And so what we find is that it's really important to be aligned with this technology for the long term. So with our Spot Bitcoin ETF, we're donating 10% of those profits to Bitcoin open source developers to ensure that there's at least a continued budget to help drive further innovation and support for this technology. We're doing the same thing with Ethereum, donating 10% of our Spot Ethereum ETF profits to open source Ethereum developers. These are large communities dispersed around the world that really rely on these types of donations in order to continue building and innovating on this blockchain technology in the same way that we see open source developers continue to build and innovate on existing open source technology like the internet and like other protocols. So it's really important that we align with the ecosystem. We hope that we'll lead other asset managers to do the same and that this will create kind of a new funnel of funds and donations towards supporting open source developers who really are the backbone of this underlying technology that we believe will transform the world.
You know, I'm looking at comments from Hong King, your chief technology officer, Bitwise CTO, talking about how every investor in ETHW wants Ethereum to continue to advance, and this donation program contributes to that goal. And yeah, if you did see that advancement, that progress, and more adoption along those lines, I'd imagine progress would be through the roof, right? Sky's the limit in many ways in terms of these products here. Ryan, appreciate you joining us. Head of Research at Bitwise, Ryan Rasmussen.